And for a little more detail on the local market, I spoke earlier to Ken Howard from RBS Morgans in Brisbane. Well, Ken Howard, not a great start to the final quarter of the year.
No, it certainly wasn't, and certainly adds a bit more powder to the theory that last week's rally was really just a short covering rally. Obviously, the sell-off in the US was the lead for the Australian market, but it still remains all about Europe and the European sovereign debt issues. So across the board selling, the big commodity stocks, the big banks, a fairly nervous day today to start the quarter.
Of course, it's been a holiday in a couple of states, including New South Wales. Was that the main reason why volumes were very light today?
Yes, certainly that would explain volumes, but the direction for the market was reasonably clear all day, and that was that we're heading into negative territories. So you always need to be cautious on the low volume days. You tend to get exaggerated moves on individual stocks, but this was broad-based selling across the market today, so I don't think the direction would have been any different if the New South Wales market had been open.
Now, broad-based selling, as you say, but the financial sector was down 3%. So what was front of mind there?
Look, there's a couple of issues that are troubling the banking sector. Again, they're all emanating out of Europe. There's rumours going around that some large French banks will need to recapitalise. So that kind of negative sentiment rubs off on all the major global banks. It doesn't matter whether you're in Australia, whether you're in Japan, the United States, all the major banks are being lumped together. So expect a weak time as far as share prices are concerned. But our outlook for the Australian economy is still robust, so expecting Australia's major banks to hold their dividends, which should give them a bit more support.
Yes. Well, in company news, Elders has announced the sale of all its forestry assets as well as its grain trading business. Now, is that a sensible idea?
Look, I guess as far as Elders is concerned, the forestry assets is the big new news. It's in their books at over $500 million. Now, it's debatable whether they'll actually see that type of price. If you're looking at the price that Guns recently sold forestry assets for, Elders will probably be looking at somewhere between a 40 to 50% cut on that book value. As far as Elders is concerned, though, it will give them cash to strengthen their balance sheet. The forestry business is a cash-hungry type of business. You know, your crop only comes in once every 10 years. So forestry is a bit of a drain on cash flow. It does tend to produce negative earnings between crops. So strategically, it's probably the right move for Elders, particularly if the global economic outlook doesn't improve, because that means the price for pulp, the price for their timber product, isn't likely to improve in the short term either.
Ken Howard, thank you very much for joining us today.
Thank you to you.